Welcome, traders. Welcome to another edition of the Johnny Show. I call it the Johnny Show. Alrighty, so welcome to the next live stream. Then the next live stream, I want to be talking about the markets today, of course, but obviously I want to be focusing on what the title of this session is all about, which is focus on the market, not your biased view. All right, focus on the market, not your biased view. And that's what we're going to be focusing on today. So as you guys are logging in right now, give me a hey, a yay in the chat box. Tell me where you're calling from, and I'll get back to you. Well, not really get back to you, but you know what I mean. All righty. I tell you what, guys, I tell you what, doesn't it make such a big difference when you have a good night's sleep? Really had a good night's sleep last night. Yeah, for you guys that are watching the replay, I'm just filling in some time right now to allow some more people to log in, and then that's what I'm going to start. Okay, so don't chuck a little hissy fit. I'm just filling in time. So what I did last night was I had a hot bath. I had a really nice good meal, like a really high carb meal actually. I also had some green tea as well too, which allows the I'm not sure if you know, but if you have a high carb meal, then you have green tea afterwards, it actually slows the digestive carbs down, which actually allows you, instead of getting a big sugar hit, it actually slows down the carbs, which then allows to slowly release those carbs a bit more, which helps you sleep a bit better at nighttime. So if you have a high carb meal at nighttime, have a nice hot green tea just by itself, just flat green tea, and then that will help you out with your sleeping. And then also just journaling, just journaling and just writing things down and stuff and so forth. And yeah, that really helped me sleep last night. So it was a bit of a sequence there. So I want to focus on this here before I do get started today, guys. Let me get started with the typical disclaimer. Hey Rav, how you doing, Mel? Well, my man. Alrighty, so guys, do not place a trade based on what you're seeing in this session today, because trading is all kinds of risky, and it can cause substantial financial loss. There's no guarantees of making money in the market, and this is just general advice only, okay? So let me move forward through here. Oh, by the way, guys, if you haven't done so yet, and if you want to, then you can grab the trading course flash sale there, or if you haven't done so yet, make sure you also grab the free trial to the Master Trader Lab. Check it out. If you're not happy with it, let me know, and you'll never be billed. So one thing I want to focus on in today's markets, or in today, is I want to focus on more about if we have a look at the actual market here, I want you to think about this as a market here, okay? If we have a look at the market, we can see that we're not really, when we're looking at, say, the S&P 5 or Dow Jones right now, we're not really getting strong sellers, are we? We're not really getting some really strong sellers here. And that is worrisome, because we had a nice move up through here, and we just see how we're just slowly going down. We're not really going down quite a lot, okay? Now, generally when that happens, when we get a slow move down, generally when that happens, it actually means that the buyers are likely to come in soon and take it back to the upside. Now, why I say that is that because if we were likely to get a nice sharp pullback, we'd start to see candles like, see this big red candle here, and this big red candle here, and this big red candle here. What happens a lot in the market is that when it gets to a significant level, it either pauses or reverses. So what happens here is that you can see how that the market, sometimes the market will do this. Okay, let let me crank out. The hell did I just click on? Let me. Oh, there we go. I'm losing it. Some people say I never got it. All right. So what happens a lot of times, right? Let's just say, for example, we have a significant level through here. Okay, a significant level in the markets. And what happens when you hit a level of resistance? What can happen a lot of times is this, right? Is that the market runs up, and then what does it do? It might hold for 1 or 2 days, but then it rejects, right? It rejects us. It reverses. We are uptrend, and then we reversed, right? So this is called a reverse. So the market either pauses or reverses. Or what can happen is the market runs up, then just goes sideways for a little bit, and then continues. This is called a pause, which is the exact same thing is happening in the psychology of the market, right? This is called energy building, meaning it's against the trend. So we're building energy here. And this here is also called energy building as well too, right? So that's also called energy building. Now, energy building simply means it's just building some energy to go for another run again. So as we look at this here, we're not really getting a sharp pullback yet. Now, obviously anything can happen, but we're looking at today. One thing I'm seeing right now is that we're not getting we're not getting strong sellers at all. It's just like sideways overall. Same for the S&P 500. You know, if we look at the S&P 500, right, we're not really getting, we are slowing down a little bit, but we're not really getting any strong sells yet. Now, that doesn't mean it's not going to happen, guys. We're not going to get a drop down. That's not going to continue dropping down. But yeah, you can see how it's just pausing here, right? We're not getting any strong sellers right now. So it may continue down, guys, but the longer it holds here, the more probabilities that we're going to get a breakout bar back above this resistance level and then a continuation. So as you can see, the more it just goes sideways here, the higher probability that's going to happen. Because the markets are the pausing or reversing. And the same for the NASDAQ as well too, right? We're just getting that sort of, let me just delete that, right? We're getting some sort of a pause right now where we are right now in the markets. And then we're likely to see a move back to and again, guys, the thing that I'm looking at here on some of the markets, right? So the Dow Jones and the S&P are just going sideways. But what's happening here on the NASDAQ is if you look at the NASDAQ, right, we're still getting a slow move up, which right, this is a slow move up. It's not really sideways. But the thing is that as this market's slowly moving up, we're slowly getting a bit of a sideways movement here. But we could get, the thing is if it goes up very, very weakly, very, very slowly, then that could be a precursor to a strong selling movement here. But as I speak right now, no one knows what's going to happen, okay? But by looking at the markets right now, we're pausing at this level. And the longer we pause at this level where we are right now, the high probability that we're going to continue break and we're going to break up to new highs. That's just what the market's telling us right now. So the whole session here, guys, is that trade what you see, or focus on the market. Focus on the market and not your biased view. It's so important to do that, because I guarantee you there's many times in the markets, many times in your trading career, right, that when you're trading, you just like, the market was always telling us what was going on. We were just focusing on so much. Okay. We just focus on so much of we focus on so much on what we want the market to tell us, right? Because it's our ego is coming into place. The thing is this, guys, is that the market has no respect the market doesn't give a shit about you. It doesn't give a shit about me either. And so the more we can remove our ego of trying to be right with the market, the more we can actually just flow with the market. Now, someone said, how can you flow with the market if you don't know what's going to happen in the market? It's called going with what the market's telling you right now, okay? All we have is today. And the only thing, right? And the only thing that we have is today. So we can't make any decisions based on what's and if tomorrow is a different story, then guess what? If tomorrow changes its tune, on a short term that is, then we need to change with it. It doesn't mean you trade that, because if you're trading the up candles, the down candles, the up candles, the down candles, and you're trading a lot, what's that going? That's creating a lot of emotion. You're trading a lot. You're probably going to end up paying a lot of brokerage, plus all the losses. You're probably going to end up doubling up, and then you're going to end up going backwards. And so, so that's what I mean by flow with the markets. Okay. So, and as you can see here, right, like I've been looking at this recently, as you can see here, right, look at this transportation average. Look how weak this pullback is, right? This is just a really, really nice pullback in the scheme of things. Now, this actually is still a lower high here in the transport. So this high, and then we had this lower high through here. That could actually, this lower high and lower low. So we did get a deep pullback. So this actually could be another move down on the transports, on the transportation average. So by looking at this here, the overall major resistance levels and support and resistance levels are probably around there somewhere. And so by looking at that, that's what we can see right now. But here's the thing, guys, and this is what I'm saying here right now, okay? There's two scenarios. People are going to say, duh. So they're going to go up or down. There you go. There's your scenario. Tell me something new. Anyway, let's remove all that, okay? This is what I want you to do, okay, guys? If you're looking at the transports right now, okay, we had a big, strong rally down and a big, strong rally back up. Now, you must also be alert to what could possibly happen, right? And what is that? If we're looking at this market right now, we can see how this level through here, right? This entire level through here. If we bring up that weekly chart again, is that level through there? Plus, there's also that level through there, right? So it's more like an area, isn't it? It's more like an area. If I bring up my Fibonacci tools from there to there, yeah, look at that there. That's right on that 32%, isn't it? So it's more like an area that we have these levels. So it's probably from here up through to here somewhere. So this whole area right now, remember, it's not a level. Sometimes there's a level, but then a lot of the times it's more like an area where the market could find some support, right? You can see how we had a lot of resistance here, a lot of support all through here, a lot of support through here, and then the market rallied back up, and now it's coming back down, all right? So this is an old area on that weekly chart. So we go back to our daily chart now, and what do we see here, right? This market's getting very, very, very close to this area of what? Of this support level here that we identified on that weekly chart where it's likely to find support. So here's the thing, guys, okay? Here's the thing, is that if we're looking at this transportation average right now, and if we continue breaking well below, say, let's actually bring this up here. All right, if we start to break well below, say, this 175 level, we're probably going to challenge these lows down to here once we start to break this 175 level. But if we hold these levels here, guys, now this is the flip side, okay? If we hold this on the transports and let me actually delete that, and we start to get some up bars, like we start to get something like this, a very strong up bar, and then especially we start to break above these previous highs, well, guess what? It's not the bears that are in control. Actually, right now, the bears are not in control. Hey, Drew. Jesse B. I don't think he's here today, Drew. So, but that's what could happen, right? And if that does happen in the markets, right? If you look at this transports here and we start to get some nice, big, solid up bars and we start to see some really good volume spikes behind this, you better believe that that's really, really, really high probability of what? Of now breaking through. Probably, well, it's probably going to come up and challenge that area there, isn't it? Yeah, we're probably going to rally back up there and probably break up to new highs. So that's what could happen. Okay, that's what could happen in the markets there, and so that's basically what could happen. And if the transports does start to turn around, you better believe that if we turn around here and we start to create a nice higher low, and especially, guys, and especially, okay, and especially if we have a nice, good, solid green candle, that's the key here. Okay, let me show you what. Let me tell you what I'm talking about here. So let me bring up, say, the last couple months for the data here on this transports. This is the key here, guys. Okay, because this is now understanding market psychology when you're looking at this here. If we get something like, if the market holds here, and even if we get another little down day through here, okay, even if we get, say, another little down day through here that looks something like that, all right, and it's coming back down to the support level, and then suddenly out of nowhere we get something like this where the market opens up and we get a very nice big strong up candle like that, and then suddenly we get the volume, and then suddenly the volume is doing something like that as well. Well, you better believe that, because, and here's the thing, guys, here's the thing. If this does happen, if this scenario plays out, which I'm not saying it's going to, no one knows, but because we've had all these small little candles coming back down, which is known as weak sellers, and then suddenly a big strong green candle, that is the sign of a really high probability continuation. We're likely to break these highs and probably race back up towards these highs up here somewhere. Something like that. There we go. Drew, why do you always retract your messages from the chat box? You put it up there and then you delete it. What do you do that for? So that actually could be a scenario. All right, so that actually could be the scenario. And again, guys, it doesn't matter what's happening right now with the debt or whatever, right? What you need to do, and what's so important to do, is to focus on what the market, because the market can go for, yes, we may be heading into a recession. It doesn't mean that's going to happen now, right? And focusing on what the market's telling you right now. And it's really interesting. It's really, really interesting in this chat box here. Let me so it's interesting in this chat box here, because I have Rav right now is ultimately short right now, and he is so biased. He is so biased on the short position. He's looking for everything to confirm his downward position. Yet we have Trent, which has actually, you know what, I'm going to give him a hat off to Trent. Trent's been a bull for many months now, and so he has been right in that way. That Trent has been Trent now is also in the makings of buy the dips. So isn't that interesting? That actually that's what makes a market, right? We have Rab that's completely short this market, and he's finding any reason why this market's going to go down. And then we have Trent, who's ultimately bullish, and he's obviously looking for reasons why this market's going to continue going up. So that's what makes a market. Isn't it interesting? We have two people on the opposite side basically against each other. One of you guys are going to be right. I didn't care about being right. I didn't care about Rav. Okay, Rav said, this is interesting. It's just interesting the way people talk. Here's this thing. I think, here's that word there. I think smart money will sell here. Never trade based on what you think, hope, or fear will happen. Never trade based on what you think, hope, or fear. And because of that, because if you put a trade based on what you think, hope, or fear will happen, that's never a good idea. Never, ever, ever, ever a good idea. And what's going to happen is that you end up going to get rolled over by that. So here's the thing, guys, about trading the markets. And this is actually really interesting within the chat box, right? Really, really interesting in the chat box, because we have one person who's very bullish in the markets and has been bullish for quite some time. And as you guys know, right, like when it comes to the actual S&P 500, the Dow Jones, you guys know, right, that I've been saying now probably for the last month, maybe longer, that the bulls have it. The momentum is to the upside, so don't fight the momentum. So probably for the last month, you guys know that. For the last month or so, I've been saying don't fight the momentum on the upside. We haven't got a clear shift on the downside yet. We are getting a bit of a slowing momentum right now, but not a clear shift on the downside. So by looking at that, again, guys, it's really, really interesting to see what's happening through there. You know, guys, within my trading, if we look at the S&P 500 and we're trying to predict what's going to happen tomorrow, that's a non-winning strategy for you long term. Because guess what? Just say, for example, Rav, just say, for example, Rav, you're right. You know what I mean? And you get in based on all these analysis and everything that you've done here, and you've pulled this information from here and information from there. And then you trade a put option here, right? You short the SPY as an example. You got put option on the SPY. And then say the SPY does come off. You, legend, you got it right. I told you I was right. And then suddenly what? And then suddenly you got it right. Cool. Now, the question you have to ask yourself is, how are you spending time developing the foundation that you can be confident in, knowing that you can replicate that result for the rest of your life? You can't, right? Because if you get into a long position right now and the market continues up, if you get into a long position right now and the market continues up and you got it right, yippee doo day, you legend, you got it right. You made some money, right? And you probably didn't put a lot on it, right? You probably didn't put a lot of money on the market, because if you did, you're probably overconfident. But the thing is that when you're looking at that, right, you got it right. Cool. What you did there and how you're spending your time, is that you spending time developing a foundation that you can replicate that result to make money out of these markets for the rest of your life. See, as you can see here, guys, it's never about, like, if someone goes long here right now, just say, for example, Trent goes long here and he's talking about all this government stuff and the spending and all this sort of stuff, right? Because there's two sides of the coin here, guys. There's two sides of the coin, depending on which way you look at it. If you look at the market right now as a whole, there's some negative things that are about the markets, right? So we're getting late in the cycle. We're starting to raise interest rates. There's the debt there as well too, and all that sort of stuff, right? There's a lot of things that are happening here, right? But then on the flip side, we can start to look at the numbers and the data of a lot of different things in the markets that are also a really, really, really good key indicator, like houses and mortgages, and people defaulting on their property is nowhere near like 2008. And banks right now are more cashed up than ever before, and all these different things, right? So depending on which way you're looking at it, there is some negative things there, but there is also a lot of positive things that are happening behind the scenes that people don't realize. Like, people don't realize that the margin right now that are under with banks, and the amount of stress that banks are under is very, very, very low when it comes to the American banks. Right, because they are much more cashed up, ready for something to happen, and much more protected this way if something's going to happen again in a recession than they were in 2008. As I said before, the default rates are much, much lower than they ever have been, and a whole bunch of other range of stuff, guys, I can tell you that's on the positive side as well too about these markets, if you're looking at the fundamental data there. But let me ask you a question here. How is that fundamental data right now going to help you make money tomorrow? Because the thing is this, is right, if you go short right now because you say the recession's going to happen and I'm going to short the market right now and I'm going to get in based on what I think or hope is going to happen, because no one knows definitely what's going to happen, and say the market does go down and you get it right, once again, how are you going to replicate that result? Because I guarantee you, right, if the market does go down, because you're using this, and it's interesting, guys, if you are doing big economic fundamental data as your analysis, but you're a short-term trader, can you see how that's out of sync? Right? Because remember, the data economics is like what's going on right now in the underneath surface and what's likely to happen over the next couple of years in the markets, not today. Right? Not today. So that means if you're doing all this data and all this economic data to see what's likely to see what's going to happen next week in the markets, that's just ludicrous, right? Because the fundamental data is a longer term picture, right? Is the bigger picture. It's not what's likely to happen in the markets in the next couple of weeks or month or so. So we could, even if we are going to go into a recession, we could make all-time new highs and run up to 29,000 Dow before we actually start a real recession or a bear market, call it. And remember, guys, a crash, if the market is going to crash, a crash takes 12 months to 2 years to happen, right? It's not going to happen in one day. And if people are thinking that, then something that's happened once or twice in the entire history, maybe even 3 times in the entire history of the markets, and you're trying to think it's going to happen again, meaning we get like a 20% drop in the markets in one day and so on and so forth. That's just ludicrous, right? That's just ludicrous because it's not about getting that. So I want you to focus on the market, not your biased view. And one of the biggest mistakes that I did, I spent so many years trading based on what I thought was a good idea, having my biased view on the markets, right? So if I've done this many times, if I'm short a stock, just so I've got put options on a stock, and it's starting to create what I call a false breakout to the downside, it's now a false breakout to the downside, and it's now rolling back to the upside, and I'm seeing that, and I'm seeing volume coming in with that false breakout. Just say the market breaks down and I get into as a short position, and then so the market completely reverses and start to rally back above that that say support level there, and I start to see volume. That is my first indication that I should be in that trade. Then it starts to make a higher high, and let me actually visually show you what I'm talking about here. You know what? Let me do this here. Right, and so let's say, for example, the market was coming down like this here, right? And then we suddenly had a breakdown like that. And let's just say, for example, I went short here, right? I went short there. Then suddenly I went short there, right? Because I just thought it was a good idea. It looks like it's breaking down. I thought it was a good idea above this resistance, and we're starting to get some really big, heavy volume. And then suddenly we start to rally back up above this high, and we rally back above this high. This is the first sign that I shouldn't be part of this. This is the second sign that I should be part of this. But I'm trying to find any reason and a lot of hope that the market's going to hold in and continue down. And then generally what ends up happening is that it just keeps going up and up and up, and my options go to 0. So that's what happens so many times in the market, because I'm trying to put my biased view on that instead of saying, you know what, I just need to get out of this market. I need to get out of this trade because it's just not working for me. Again, it's because I was trading based on what I thought was a good idea. I was trading based on what looked like a good idea. And most traders don't understand that it's not about what looks good. It's not about what you think is good. It's not about what Donald Trump says. It's not about anything like that. That's going to create consistent results. Because if you get into a trade today based on what Donald Trump says, right? Now, yes, if you actually look at the market, right? If you look at the market down here, Donald Trump did come out and say, it's a good time to buy the market right now. And the market did rally. So does that mean now you are going to wait on every single thing that Donald Trump says about the markets and then start to trade based on that? No, that's not sustainable. That's not sustainable for the rest of your life. You may make money now in one trade or 2 trades or 3 trades based on that analysis, based on economic data, based on all this sort of stuff. But once again, if you're using your analysis based on economic data, which is a bigger picture, but then you're trying to make money tomorrow by trying to get the direction right, that's just ludicrous, guys, because your analysis your analysis compared to the way you're trading, your analysis compared to the way you're trading is a mismatch. You're doing longer term view analysis with short term trading. So if you're doing a short term trading, meaning you're looking to make money right now, and you're trying to get the direction right over the next couple of days, maybe to a week, then do short term analysis with short term trading. Makes sense, right? So that's where it comes out to it. All right. That's what it comes out to it. So the whole theme of this, guys, is focus on the market, not your biased view, and focus on spending your time working on something. And this is where I'm so blessed right now to have my trading, and what's made me do so well at trading is because I don't trade anything until I have my trading plan and my trading setup appears on the charts. Right. And I shared with you the trade that I took yesterday. It's like I just because something looks really, really, really good to me, it looks like it's going to continue up, it's going to continue down. I've learned so many times that I have um I have so many I have so many times when I've had my trading plan, but then I've had all these other things that look so good, that looks like was so going to happen. And I was the king and I knew exactly what was going to happen. Almost every single time I got into a trade that wasn't based on my proven setup, it was a dud. Maybe 20% of the time I did well, and the 80% of the time took away that profit and everything else. And now, because I just stick to my trading setup and I take nothing but that trading setup throughout the year, I fucking crush these markets. And it's not that I'm lucky or anything like that. It's just because I sit in front of these screens. And sometimes I'm trading the Forex market, the futures market, the intraday charts for 5 or 6 hours in the afternoon. And guess what? And there's no trades. And I come back tomorrow and do it again, and there's no trades. And I come back tomorrow again and do it, no trades. I have to be consistent at showing up every day and disciplined and patient and only waiting for that. So that means I have to do, if I decide to trade the Forex and futures market short term, and I decide I'm going to do, say, 6 hours a night or 6 hours in the afternoon, my time. Well, guess what? My job as a trader is I have to be consistent at doing that every single day. And then I have to be disciplined and patient. I have to be disciplined and patient to only take in the setups when they come. And that means if I'm sitting in front of the screen for 6 hours a night and there's no trades, like for example, guys, for the last few weeks, there hasn't actually, or sorry, for the last few days, there hasn't actually been any really, really good trades on the Forex market. So I've had no trades there. But it's about, and especially just that consistency, showing up every day and say, you know what, my job as a trader is to sit here and do nothing until I have my trading setup that appears on the charts. And if you can do that, you can crush these markets, guys. Because remember, it's never about the trading setup. If you look at anyone, like, and this is not just for me, guys, it's for anyone out there. It's for anyone out there. Now, meaning, like, if you look at any other system out there, really, when it comes back down to it, it's never the system that gets you, it's you that gets you. Right? I had one person that joined my coaching program, and he only just started to learn from me just recently in the last week. And he only just started to learn from me about the system. And then suddenly he completely deviated. The very first week of joining my coaching program, by the way, the very first week of joining my coaching program, he completely didn't even understand the system, didn't put the work in. He still continued the trade that he was doing. He lost some money. And then he sent me this very nasty email. And by golly, I gave him fucking stick for that, because I'm like, listen here, don't take your fucking shit out on me just because you are not taking your time and learning the system and to become a good trader. And so I said to him, show me the trades that actually met the rule, show me the trades that you took that actually met the rules, that lost money. Because people part of my coaching program, and Gregory, you're starting to see this right now, my man, most of the trades that actually meet the rules do run on for profits. Now, it could be a big profit or it could be a small profit. That's why everyone knows that are part of my coaching program. It's not the system that gets you. It's you not being consistent at showing up every day. And importantly, be disciplined and patient in waiting for those really, really good quality setups. That's what it's all about. So just give me 1 minute, guys. Just got to do a pee. I'll be back in 1 minute. Alrighty, guys, I'm back again now. Alrighty, so I hope I've been driving home that point, guys. More and more and more and more with that. Okay, it's never about, and it's guys. It has nothing to do with my system. You know, any system out there, I do believe that works. Now, I'm on the flip side. Just make sure you're trading a system that's actually more of a trend following system. Because if you look at any market, right, where is the most highest probability trades of making the most profit? Obviously, a trade that's with the trend. Makes sense. If you're trading against the trend, like a divergent system, you're always taking small profits, and then likely to have a big loss. Small profit, small profit, small profit, big loss. If you're trading a divergent system, guys, I used to trade a divergent system. Now, if you're good at that and you're very strict at that, then you can do well. But the problem with divergence is you're going against the market, and you never know how well that's going to work. So that's all I say when it comes to system. But any system out there works. It's you're not doing well there. I did have some questions there. Someone said something about Jib. Hey John, first live chat for me. Don't want to sound like a pest, but can you look at GBP USD? Sure. Great British Pound. USD. Very nice upward trend. Very, very nice upward trend. What's that weekly chart saying? Okay, so we're stuck at this level through here right now. On this one here, bit of a sideways movement. Look at this. Look at this false breakout here. This is a classic false breakout. Look at this. A classic false breakout. Now, what is a false breakout? A false breakout is that when the market actually, you see the market actually find a lot of support, it actually breaks down, goes sideways, and then continues back up. Where's it likely to continue back up to? To the top of the channel. So if you ever identify some sort of a channel, which you can probably see, it's more like, it's probably through there somewhere, isn't it? Yeah. If you identify some sort of a channel, a lot of resistance, support, and then we break down, we go sideways, we don't continue, but then we get back above the channel, then the high probability is that we're likely to get back above, we're likely to get back up to the top of that channel. False breakout. But what's happening right now on the short term on this daily chart is that we're getting very, very, very strength buys, right? Look at this very nice flowing market, nice low, nice higher low, market's breaking up. We're getting some sort of small bar pullback right now. Let me delete that. So we're getting some sort of small bar pullback. We're getting nice upward trend. My moving average is starting to point up really nice as well too. So very, very, very nice upward trend. Looks very strong. I'm not saying you should go out there and buy the Great British Pound USD. Right? I am just saying that it's looking very strong. It doesn't mean that it's going to continue that way. You just got to trade that. But if you're trying to make money over the long term, then use fundamentals. We'll use fundamentals and technicals. If you're looking to make money over the longer term, then start to look at weekly charts and tie that in with fundamental data, and then use purely good technical analysis to use on that chart there on the weekly chart. Ray Dalio lost all his clients' money on his first short trade. He thought Mexican default is going to cause a market crash, but it went up. I guess we all have to lose in order to kill the... Huh? When did that happen? Ray Dalio lose money. The thing is that if you look at the way Ray, in his early career, yeah, that's what happened when he first started, guys. Come on now. Um, yeah, that's when he first started. Guys, he's not the most largest successful hedge fund on the planet by 3 for no reason. So people are talking about the Russell, big red candle on the Russell. Yeah, there's really nothing there, guys. Really nothing there. What I mean by that is that we had this. Yeah, exactly. Um, yeah, you know. So by looking at the Russell here, guys, like what do I see? I see this market actually just had a big strong rally up, and now we're getting some sell off here. We are starting to show a bit of a weakness in the markets right now, and we're definitely getting a momentum change in the Russell here. But that doesn't mean that it's going to be a big crash or anything like that. We definitely have, where's that support and resistance levels through there? Right, we definitely have this level through here, which is probably going to go inside of the 50 to 60% level. Yeah. So even if we do get some sort of a pullback here, guys, it's just a nice, healthy pullback in the markets. Yeah, and again, that happened when he first started. When he first started out, and that's what led him to be where he is right now. But looking at this, by looking at this Russell here, guys, we had this nice run up and then a nice pullback through here. So there actually really is nothing changed through here, guys. That we actually are. So yeah, so and again, guys, we're not really. Yes, we are getting a bit of a sell off, and we might be able to still get a pretty much sell off, a strong sell off here. But by looking at this overall markets, guys, we have created a major. What is this up here? Now, what's the title of this video? Market update. Focus on the market, not your biased view. So if you look at this market here right now, we had this high here. Okay, and then we had this high here. Then we had this higher high up here. Right, so because we had this higher high, what does that mean? It means that the cells are no longer in control. And if we get some sort of a higher low somewhere, maybe even down here somewhere, and then we continue up, that could ultimately lead to a run up to new highs. Because remember, we have broken these highs here. And when that happens, it's not a definite change. It's not a continuation of a downtrend. It's actually a first sign. It's the first warning sign. Right? It's the first warning sign by having a higher high that this actually could be going from a downtrend now to starting some sort of an upward trend. Focus on the market. So even if we do get a bit of a pullback, this higher high is a precursor that we actually may be finding we may get a higher low through here somewhere, and then we're going to see another big strong move back up. So I definitely wouldn't want to be fighting the market. So yeah, so if you are short in the market right now, again, there's nothing here, guys, to say go short this market. There really isn't nothing here to go say short this market. Guys, if you are struggling with your trading right now and you need my help, then I'm running a sale right now for my coaching call. So make sure you go grab that. And if you do want to get if you do want to be able to just get ahead in the markets by having good chart reading techniques and so on and so forth, then make sure you grab the trading system as well too that I'm running a sale for. So DJ sell signal is crap then. I don't know, Rav. You're short all over these markets right now, man. So you've been short for quite some time. So I don't know. Whatever your plan is, Rav, you should just be focused on that. Whatever your plan is. I'm not sure. I'm not sure what made you go short. But every time I enter the market, Rav, I know exactly what I'm looking for on the charts. I know exactly the entry bar. And when I get into that, I know if it's a profit or trade, I know what I'm doing. And If it goes against me, if I have a losing trade, I know exactly what I'm doing to get out. So there is no sell signal for me personally, right? There is no sell signal for me personally. And once again, by looking at this market here, once again, guys, what's this here? This is a high. This is clearly a high here. And now we've actually made a slight higher high, a bit of an equal high here, but a higher high right now. What does that mean? Even if we do get a bit of a downward movement, which actually you can see right struggling, if we do get a bit of a downward movement, I actually believe that's going to be pretty much short-lived, and we're going to get something like that. No, not a bar like that. It might actually break up. Atta, no. So that trading course, Atta, that trading course is just a beginner's guide to getting ahead of the market. So there is a couple of different trading systems in there, Atta, that you can start to follow and start to look for. But it's more of an introduction. I give my number one trading system to only to my coaching clients. And then the reason why is because it's never the system. It takes time. And that's the reason why I do with my coaching clients, I do weekly coaching calls with them just to help them get better and better and better at understanding all the areas of all the areas of what becomes a successful trader. Because it's, as I said before, 20% of your success comes down to understanding the system. It's your ability to be able to be consistent, disciplined, and patient. Those three things. That's going to make your break as a trader. And that's the reason why. I have a really successful trading system. The problem is that most traders are so impatient. All right, so many traders are so impatient. Just like a guy who recently joined my coaching program just recently. You know, he was all excited. He all got started. He only started a week ago. And then suddenly 1 week later, because he took some shit trades and lost money, he started blowing me up on email. Fuck that bullshit. Just because you didn't listen to the system. And that's what I say to everyone. Everyone said, oh yeah, I took some trades today and lost money in my coaching program. Okay, show me the trades. And when they do show me the trades, there's nothing there. There's not even a trade there. So you can do well. You really, really, really can do well on the markets. And the question you got to ask yourself, guys, is, are you trading based on what you think, hope, or fear? And even if you do get it right, even if you put a trade based on today and it looks like it's going to go down and you get into a trade and it goes down and you got it right, how is that building a long-term future for yourself? How are you building the foundations for a long-term successful career? Because you may make money 2, 3, 4, 5 times in a row by just being lucky, by saying, you know what, it's at resistance right now, I'm going to short it. Or it's at support right now, it's going to short it. Or whatever, I'll buy it. Or whatever, right? And I guarantee you, by the time the 5th trade comes around, you make money 4 or 5 times. But that 6th trade is when you completely wipe it all out in one go, right? Because you quadruple up because you're the man, you're the shit, you've got this. And suddenly you get into something once again. And what ends up happening? You end up losing all the profit on that one trade and a lot more. And now you're down to zero. That happens so many times in the markets. So please, please, please just be honest with yourself. Are you trading something that's building a future for yourself? Or are you doing something that's building a future for yourself? Or are you just still, fucking around, so to speak? Because guys, I spent so many years doing that myself, fucking around and not being serious about this, not getting serious about this profession and not doing my job as a trader. My job as a trader is to be consistent, disciplined, and patient at taking the setup that I know that works for me. One setup. And guess what, guys? Guess what? Every single trade that I take looks almost identical to each other. Why? Because it's based on the trading setup. And the more that I can just sit back, even if I haven't had trade for a whole week or a whole month, my job is just to wait for those setups. And then just take it. And I know if I do that, right? I know that if I do that, I will continue to kick ass at this market. So, and that's where the foundation, guys, is that you may be patient and disciplined, and you may be patient or disciplined in the markets, but what are you patient and disciplined for? Because if you don't know exactly what you're looking for, then you consistently showing up in the markets, you're consistently showing up for what? To look at the markets, to try to look for something that looks good, right? If you're doing that, then guess what? That's nothing there. That's why your foundation is understanding one really good quality setup. Then be consistent at showing up every day, looking for those trades, and then being disciplined and patient and waiting for that trade to set up. The foundation is understanding what you're looking for in the first place. Then all the other things come into play. But if you're being disciplined and patient and consistent in looking at the markets, but you're still trading based on what you think, hope, or fear, again, you may be right 4 or 5 times in a row, but you're never building that foundation for long-term success. You're going to end up blowing yourself out of the water. And that's what happens so many times, guys. So many times. So anyway, guys, that's it for me today. I'll look at the DAX, John. Awful chart, head and shoulder, and retests, neck failing. I wonder if Europe is leading. Rav, here's the thing about head and shoulder formations, okay? It may be a head and shoulder formation, and we may get it, and the head and shoulder may actually cause some sort of a short term, maybe a week or so drop in the markets. But that doesn't mean it's going to completely come unglued and it's going to keep going down. There's been so many times when I've seen a big head and shoulder formation and it's broke, and we had maybe a couple of weeks of a downward movement, for that to completely retrace the head and shoulder and break up the new high, and then from a month or two later, it was up at new highs. So just because there's a head and shoulder formation doesn't mean that it's going to completely unfail. So I've seen so many times where a bearish looking head and shoulder formation had a short-term drop, yeah, but the overall picture actually created a big bullish move, and then it continued up to new highs. Hey, John, how you going, man? Okay, so Steven says, no confirmation yet, but we should watch to see what markets do with the 50-day moving average. Okay, and if it makes a lower high on the bounce and breaks below, we end up making this pullback. Okay. Personally, I am shorting with put options intraday right now and covering before market close. Okay. So 1 minute you're saying there's no confirmation yet, and the next minute you're saying you're just buying puts and then getting out on the close. It's a very risky strategy. There's no consistency there. You're just still doing that. Especially since we've been bullish since the start of the year. Personally, cool. I can't figure out what my optimal trading setup is. And Corey, the at the end of the day is you are the one spend a lot of time, years and years and years, looking at the market, studying the market, look for repetitive patterns, look for setups, look for patterns that repeat themselves, look for the ones that are more consistent, and then identify what that pattern is, look for a good entry and start to develop a trading plan around that. That's going to probably take a good 2 or 3 years to do. I'm not joking with you. So that's the first way you can do that. If you don't want to spend any money on education, that's the first way to do it. And you can do that, right? The more time you spend in front of these charts, the more time you start to see repetitive patterns. That's how I can talk about false breakouts and all that sort of stuff, because I've just spent so much time in front of these charts. That's the only way you start to get your optimal trading setup. Or secondly, you invest in someone that you believe in, that is also trading themselves that system, and also can personally coach you as well too, or give some personal interaction to help you do that. That's where investing is. So I invest with my coach right now, and it's been the best thing ever. So yes, you have to invest to get ahead. I remember, guys, when I lost $250,000 because I gave that money to someone else, and then I was up for that. I remember. I remember at that time, I basically ended up borrowed $10,000 to get some. I was already underwater, had no money to trade with. I ended up going to borrow 10 grand from from some people and my mother and father-in-law at the time. And plus I saved a little bit as well too. But I had no money to trade with. But I remember actually, I was at that time that I actually went to my 7-figure coach, my very first 7-figure coach, and he put me on a 6-month probation period. And even though I didn't have any money to trade with, I was still learning exactly what to look for, exactly what setups work, exactly what I'm doing wrong. And he put me on a 6-month probation period where I couldn't trade at all. And my job was to just to understand the setup, be consistent, disciplined, and patient. And over this time, I'm going to build my confidence. But guess what ended up happening? By the end of the 6 months, even if I didn't have money in the 6 months, I was learning exactly what to look for, building my confidence. So by the time I actually started the trade live, my confidence was super high. I knew exactly what I needed to do. And then boom, I started to make money. So a lot of people, that's where a lot of people have gone wrong in the past. And I'm so grateful that I did the opposite. So, some people say, well, I don't have money. I can't invest in coaching or education because I need to make more money first and then I'll buy that. But the fact of the matter is that if you don't invest in education first and in someone that you believe in, you're going to end up blowing up that account. And then you're like, man, I could have bought some education with that one. So it's a catch-22. But I did the complete opposite when I first started. When I almost went belly up myself, quarter of me in a hole. I borrowed some more money to go get some more coaching off my coach. He put me on a 6-month probation period. And that was the most important thing that I ever did because it got me really, really focused over those 6 months to build my confidence, and everything just took up from there. And now I do the exact same thing. Now I invest tens of thousands of dollars every single year with my personal coach, multiple 7-figure trader, and he keeps me on track as well too. So yeah. And if you're interested in my coaching, guys, just email me and I can have a chat with you. All right, guys. Well, that's it for me today. As I said before, guys, if you haven't done so yet, and if you're looking to just get started in the markets, guys, and you're wondering where to get started, then make sure you grab the free trading course there, and then also get access to the free trial lab there. But also, guys, if you are struggling right now and you've been trading for a while right now and you seem to be losing money and you seem to not be able to get ahead, and you'd like to just get, say, one-on-one coaching call with me so I can see what you're doing wrong, so I can set you straight and give you a bit of a plan for you to start moving forward. And I'm running a bit of a sale right now, a sale right now on a one-on-one 1-hour coaching call with me where I'll figure out exactly the mistakes that you're making. And then I'll start to say, okay, this is where you need to start moving forward. And because everyone's different, right? So then I can start to devise a bit of a plan for you to help you start to actually make progress in the markets instead of spinning your wheels all the time. So, all right, guys, that's it for me today. Have a great day, and I will catch you guys later. See you guys.